What is up, YouTube? We back already. I got me a chair whip, you feel me? But now we're gonna go over the fundamental analysis of it. This page 45 of my book. We're gonna go over my cheat sheet right here. This cheat sheet is basically right out of my book. So on my book, I wrote down a lot of the indicators I'm gonna talk about on here. Y'all will see the indicators and y'all hear me talk about them and all of that. But I ain't just gonna post it on the screen and give y'all the free game. The free game is in my book, basically. The book is only $12. You can make $12 back in the stock market. Like the ebook like 9. I don't know. You can make that shit back easy. I can show you how to make $9 in one day off of this alone. But look though, cheat sheet. We got 8 minutes. We finna get into it. Leave, like, all that, man. Drop some comments because the more comments I get, the longer I make these videos. But the first thing I always go over is the earning reports. I don't go really everybody different. So this is what I do. First, I go over the earnings. Earnings report, it tells how good a company is doing compared to what they predicted to do. So as you can tell, on August 3rd, they did better than what they, it's green. So when it's green, you know what I'm saying, they outperform. When it's red like this means they underperformed their prediction. So earning report, they'll tell you a lot of good things about the company, what they're doing, all that. I ain't researched this company enough to understand what they said during their earnings, but they beat their earnings by 15%. And they also tell like what good innovations they have coming in the future with their company. So I don't really know what they got going on because I didn't research all that before this video. But as we can tell, just from a viewpoint, it's looking pretty good. They missed one earnings report. That's fine. But as we can look back, they beat one earnings in a row, 2, 3, 4, 5, 6, 7, 8, 9, 10. Damn, they had 10 earnings in a row to where they predicted what they would do and they outperformed what they did. So that's a good thing because now you know this company is predicting to do something and they're withholding what they saying they're gonna do. That's a pretty good thing. The next thing we're gonna go over is the income statement, the balance sheet, the cash flow, and the income statement. I got all this written down. This is my little cheat sheet, bro. This is my fundamental cheat sheet. I need this guy. So you can use Yahoo Finance or you can use TradingView, what I'm doing, and just click the same shit I'm clicking on. First thing is the balance sheet. So I'm gonna go over this definition. A balance sheet shows you the statement of the asset, liabilities, and the capital of a business or other organizations at a particular point in time, detailing the balance of income and expenditure over the preceding period. The assets should equal the liabilities slash equities. It shows that every asset as a business acquired solely from the funds that are supplied by its owners and creditors. So first, we're going to look at this balance sheet, and we're going to make sure they don't have um, more liabilities than assets. And we can look for growth as well. So when you look at this, you want to see a good growth, which you see a good growth. 114 billion in assets went to 257 billion in assets. As you can tell, look at the year. Liabilities also went up, but the assets went up as well. That's when you look at like the percentage wise, how much it went up. As you can tell that the liabilities and equity match the assets, so they ain't got more liabilities than assets. So that's another good thing. Total debt going up, but they're obviously bringing in more money, so you know what I'm saying, that's straight. You feel me? Let's go to cash flow. Cash flow is the total amount of money being transferred into and out of business. Operating flow is the cash generated by a company's main activity. So let's minimize all of this and look from a small standpoint. Hopefully I'll get a lot of this. If y'all don't, rewatch this again and comment what you don't get, and also watch other videos, because the reason why I don't go break these down more is because I don't have comments that tell me to break this down more. So now we're going to look at operating flow, which is the cash flow generated by the main activity, which is increasingly going up. So, you know, it's going up year by year. What's the next one? Investing in cash flow is the purchase of assets and other venture assets. So as we look, okay, they buying assets, they buying ventures and shit. But as you can see, compared to this one, out of all of these, they made more than what they spent on investing activities. But right here, kind of iffy. Shit, right here, even is kind of iffy. Some people look at that, you know what I'm saying? It's up to you and your rules. I'm a bit technical guy, so if that shit look good technical wise, I'm in there. I'm in there. If that shit look good technical wise, and analysts like that shit, I'm in there. Uh, uh, Financing cash flow is proved gains from debt and payments made by the company. So this is the proved gains from debt and payments made by the company. So shit, you know what I'm saying? They shit looking straight to me. I never studied this in depth enough to goddamn break this down. I don't even know how to break it down for y'all to understand. I guess this break it down for us. They don't pay no dividends. That's another. If they don't pay dividends, I just be in there as I be in there for. I would never hold something long term if they don't pay dividends. It ain't worth it to me. Maybe one day. But yeah, I don't even know how to break this down for y'all. So if y'all want to learn more about cash from financing activities, just watch another video. Free cash flow, that shit going up like Chuck. So next we're gonna look at the income statement. Did we look at that yet? Nope. Income statement is the financial statement of a company and shows the company revenue and expenses during a particular period. The first thing I look at is if the revenue and expenses to better understand if they're being proficient with their money. So let's minimize all of this. Oh, it's minimized. Let's look at that gross profit. Ooh, that shit damn near doubled. They profit doubled in 3 years. That's crazy. The operating expenses, it also doubled, but they money doubled. You feel me? So we could look at it as a percentage wise. Is it gaining? Or we can just look at it with our eye. We can tell it's gaining, but is it really gaining percentage wise? You feel me? But yeah, the gross profit is going up. Um, the expenses are going up as well with the profits. You feel me? Uh, let's see what else stand out on here. Now we're gonna go over some very juicy things, bro. This video gonna be longer than 8 minutes. I'm gonna tell you that right now. But this is the juiciness of it all right here. So first thing we look for is the PE ratio. The PE ratio, if you want to know what the numbers are, it's in my book. Go to page 45 and we can go through the numbers together. But right here, I'm going to just describe what the numbers mean. And this is what I look for. I look for a good PE ratio. If you want to know what a good number is, it's in my book. You feel me? The good number. When I say a good number, that's the number in my book. A good number PE ratio is price to earnings. To calculate it, you would divide the share price by the earnings per share. The lower the PE ratio, the higher the earnings compared to stock price. The lower the PE ratio, typically better value stock. Usually low PE could have significant long-term potential. Standard PE ratios range between good numbers. PE ratios under 10 mean it's undervalued, while PE ratios over 25 mean it's overvalued or have larger future expectations. So this number right here is in my good range, you feel me? Volume above a good number tells you how many shares are being traded during your time frame. Good stocks typically have good volume. Also, the higher volume could minimize volatility. P slash B ratio calculates the stock worth versus book value. To get PE, I ain't gonna read how to get it. I'm gonna just tell you like what it really means. PB ratio is the value per share, is how much the company is worth divided by shares outstanding. If the PE ratio is higher than a good number, the investor believes the stocks will grow at a fast pace. Beta measures a stock volatility to the overall market, which is right here. Uh, the higher beta stocks over 1.0 provide better returns, but pose a higher risk than low beta stocks. Return on equity. Return on equity is the net income of a company divided by the shareholders' equity. The higher the return on investment, the better that the equity ratio. But I should have put this shit on the screen, but we learn every day. So hey, I'm gonna keep going through this and I'm gonna just read these definitions. Each one of these definitions I'm gonna read out and what they mean. So next we have return on investment, return on equity, the net income of a company divided by the shareholders' equity. The higher the return on investment, the better Debt to equity ratio indicates the stability of a company and its ability to raise additional capital growth. Interest interest cover ratio measures how many times a company can cover its current interest payments with its available earnings. Current ratio is a liquidity ratio that measures a company's ability to pay short-term debt and obligations within 1 year. Quick ratio is an indicator of a company's short-term liquidity position and measures a company's ability to meet its short-term obligations with its most liquid assets. Cash ratio measures a company's liquidity, specifically the ratio of a company's total cash and cash equivalents to its current liabilities. Profit margins measure stock profitability. The website I use for these screeners are FinViz and TradingView, Thinkorswim. Profit margin above 10%. Also, now we done with the paper. I know there was a lot of definitions and shit you might not understand, but that's okay. You heard of it now. You heard of it. It's in your subconscious mindset. So next time you hear something like return on equity or beta, you got it in your subconscious mind to be like, I heard that before. You can understand it when somebody talks about it. But now we're gonna look over economic moat. The economic moat is how powerful, how strong a company is compared to others. So if me and this other dude do the same thing, we both sell shirts. That's it. Then our economic moat is like weak. You feel me? Because we do the same thing. But say I sell shirts and I sell jumpsuits and I sell everything, then mine is stronger because it's like I do more. But it's not really that. Economic moat is like this from my terms, my word. Economic moat is like something different a company do that nobody else can copy. You feel me? So if I do something so out of the ordinary that nobody else can copy, that mean I have like a strong moat. So for example, we'll say like Apple. Apple got a strong moat because they made all their products tied together. Like Apple laptop, Apple phone, all this. You can link all of them together. You get the same shit on each phone. The Chipotle, they get fresh produce, like I don't know, every day, some shit like that. I don't know. But they get fresh produce by local farmers consistently. Like Subway don't get fresh produce from other farmers locally. Nobody else do that except for Chipotle. So they have a strong moat because they did something out of the ordinary that is hard for somebody else to copy. So if you run a business, you will want that as well. You will want to do something so unique and out of the ordinary that other companies can't really copy you because, you know what I'm saying, it costs too much or, you know what I'm saying, other things like that. But yeah, this was a rush video because I'm keeping them under 8 minutes. But if you want to understand more, you want me to break down a little more, just let me know. Appreciate y'all for watching. Like and subscribe. Peace.